For Derek again, my name is Patrick Hawe, and I'm an associated member of T3 Trading Group, which is a registered SEC broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial conditions. Please take a minute, pause the video, read through this full disclosure. Thank you very much. And position disclosure, nothing different from yesterday. Had a good NVIDIA trade this morning, but ended up rolling over, so did not get to keep that at all. So let's talk about today. So yesterday, honestly, today was like in some ways an opposite version of yesterday, in my opinion. So probably not gonna have like a ton of new things to talk about today, but I guess let's just review what happened. So yesterday, we were set to open below support, but we were discussing how this is a range-bound market and how do range-bound markets work. When it looks like you're ready to break down, that's when they save it. When it looks like you're ready to go, that's when they reject it and take it back down. So yesterday morning, I pretty much titled the video like the exact same today, but I switched the word bulls with bears. Yesterday I was like, range-bound market continues, bulls make their stand. And today it was range-bound markets continue, bears make their stand. So honestly, really like similar to yesterday, but in an opposite sort of sense. So coming into today, we had a small gap down, nothing too big. I think it was like 0.5% by the time we opened. You know what happens with common gaps? Common gaps tend to get filled. So SPY filled its common gap right away. And that was the high of the day. I think Josh actually called that pretty early, maybe somewhere over here, but just seemed like the high of the day was pretty much in, even before this rollover really happened. Common gap got filled right away, a little bit of a rollover, back up, not really much going on, and then market ends up rolling over, spilling over, and closing fairly weak, but once again closing above 410, closing above 411 actually. So still, you know, yesterday we held daily support and stopped at daily resistance. Today we held daily resistance and stopped at daily support. So what was the main thing I think that caused this rollover? And again, this looks bad probably intraday on a 5-minute chart, but on a daily chart, you know, is this so bad? Not really. It's just more of this sideways kind of range-bound choppiness. Let's take a look before real quick, because I think the VIX is really what did it for us, but let's take a look at the other factors we were worried about this morning. So we mentioned some things to keep an eye on today in the morning meeting to be cautious about, even though yesterday, pretty similar to this day, right? Like, okay, bulls look great, they close well, let's go. And then nope, similar. After yesterday, bulls look great, is it time to go now? Once again, nope. A couple of things that we wanted to keep an eye on this, throughout the day today. One, the bond market rates. So TLT was back down today, meaning rates were back up. The 10-year specifically has been floating with the 3% kind of like threshold, the big, whether it's psychological, what have you. It's been shopping that for a while. So TLT ended up finishing down today, which means rates finished up. Not like a huge move. And you can even see here, while SPY was trying to be stable, the bond market was also trying to be stable. And then bonds ended up rolling over. So rates ended up higher. And again, this is definitely something to keep watching, as this is in a downtrend. The moving averages are sloped down. We're below those slope to moving averages. So you are inclined to think by, the good book of technicals that this is going to continue to go down. So this is something to keep watching. And then let's see how the dollar did today. Similar look, really, TLT and the dollar that they had this morning. So again, looks like SPY, dollar open, ticked down a bit. Oh no, here's the open here, sorry. So dollar, yeah, same thing though. Dollar open, ticked down a bit. SPY's trying to be stable throughout the morning, and then bond market falls over, dollar starts to go up, equity market falls over. But the main thing that I really tried to point out this morning was the VIX as well as the VVIX. So let's take a look at how those charts ended up doing. Is this accurate? VIX ended up selling off like that. Let me double check with UVXY. Wow, UVXY had a decent sell-off into the close. I just actually kind of noticed that. So coming into today, this morning, back to what I was just saying, and it looks like the VIX actually rolled over into the close, which is an okay sign for the bulls. VIX didn't close too strong. But this morning, we were basically saying, okay, look at, here's your daily chart for VIX. You got a downside niner the other day with another leg down yesterday. And we even ended up closing pretty weak today. Although intraday, VIX definitely had a really strong bounce here. So this is the intraday chart, the 5-minute chart for VIX. Really nice rip here intraday. And that's really all it takes when the VIX is getting a bit oversold. You've been going down for pretty much 10 days straight here. And that's the other, like, when you want to think about, is the market going to break out of the range or not? Does it look like the VIX can have a whole another leg lower? Maybe. Or is it better odds that VIX might have a bounce for a day or two, or might at least just stop going down for a day or two? And if that's the case, that's definitely going to prevent the market from breaking out any higher, for sure. So the intraday down move today, I really wouldn't chalk it up to, I'm sure CNBC can talk about a headline tonight, but I wouldn't really chalk it up to anything more than just the VIX having an intraday up move. This is the 15-minute chart, so here's the open, bit of a sell-off, and then rips right back up, and then we ended up selling off into the close, which is pretty interesting, actually. And then the VVIX, aka the vol of vol, also gapped up today. So this is interesting and paints a bit more of a worrisome picture to me than just the VIX being down, because the VVIX tends to lead the VIX, which tends to lead the market a bit. So same thing coming into this morning. If you didn't know what this was and you thought this is just a stock, and you're coming in after yesterday's candle and you're seeing, some oscillators get oversold, is this a short? Is this a better short or a better buy? Not knowing what it is, just looking at the chart alone, you're probably thinking it's a better buy than a better short. Like, you're just relying on pure momentum if you're looking at this for a short. And it's interesting that this actually gapped up, still didn't close fantastic, but closed higher than it did yesterday, gapped up. Yesterday this closed at 87, now this is up into the 90s. Once this is, as a general concept, once this is below 100, it means vol is contracting, vol's heading down, vol's getting calmer, and when it's above 100, that's when vol starts to get crazier. So this is something definitely to keep our eye on for tomorrow and the next coming days, is if this actually starts to rise before the market comes down, that will probably lead to the VIX rising before the market coming down, which might eventually lead to the market coming down. But other than that, we have CPI on Friday, inflation number. Everyone's going to be watching that and ready for that for sure. What's my thoughts or opinion on it? Honestly, I'm trying not to have any bias going into it. I think the more we rally into the number, the more bearish you can approach the number, as opposed to, everyone's scared of the number, so we sell off big into the number, and then no matter what the number is, we, kind of like don't go down, like sell the rumor, buy the news type of thing. Personally, I don't know. I think it's pretty mixed. Like, I feel like a lot of people, like, there is some evidence out there for sure that inflation may have peaked and may be coming down. But on the other side, I kind of feel like it's almost like hopeful. I feel like it's like hopeful thinking in a way. Like, I don't know. Personally, I'm not convinced that inflation is all good. And even if it did peak, meaning like we've seen the highest print, it's not just going to like nosedive right back down. I don't think so. I don't know. Maybe this number totally, is great and much lower, and I'm totally wrong, and the market, rips higher. But you would need a pretty good. Yeah, I think you're going to need a pretty good number for a real move up. And if it's at all high, I don't think it even has to be like all that hot. And this is just like my opinion, I don't know. Market's crazy. They can do anything. They flip flop every other day. But I think if it's still hot, I mean, then it just goes back to the same kind of like bigger picture narrative of don't fight the Fed. The Fed is pretty fully hawkish. Barkin or whoever like half kind of dropped a possible pause, quote unquote pause in September. And that's kind of what we chalked this rally up to, was the pause in September. But unless that's coming from Powell's mouth, I don't really buy it. And if inflation doesn't really have to beat; it just has to like keep being hot, and it just goes back to the rhetoric of don't fight the Fed, and the Fed can't really do anything but be hawkish until this at least starts to get somewhat better. It hasn't even really started to get somewhat better for the most part. And yes, there are some signs, some evidence here and there, but I don't know. We'll see. So point is, I guess to kind of wrap it up a little bit for the market in general thoughts, CPI this Friday is very important, and much like other very important events that happen in the market, whether it's a big earnings report or a big earnings week, or like a really big Fed meeting where there might be a big decision, or might be the press conference is going to be really important, so everyone's going to listen to the press conference. Oftentimes markets kind of chill out the couple days before it, for the simple concept that it's like a binary event, so you can't really be too sure. So not that no one's going to load the boat either way, but for the most part, you want to be hedged out. You want to be not leaning one way or the other, because you could either be really, really right or really, really wrong. So it seems like the market is really just respecting this range that we're in as we come into the CPI numbers. So that's kind of what I said this morning. That's kind of what happened today. And I'm, kind of thinking the same thing's going to apply tomorrow. If we get a big, and again, that could change with a big gap either way. If we get a big gap, there's still going to be a possibility of a gap and go. But there's still going to be also the possibility of that gap just resolving itself. Same way, just like yesterday was very possible for a gap and go to the downside. But we laid out the game plan for, if bulls are going to save this is probably what they're going to do. And that was, reclaim 4,100 within the first hour or so. And that's what happened yesterday. So today, very similar to like these 2 days, just kind of, up to the top of the range, 415 to 416 half. Really, 416 half is confirmation, I think, for SPY. But, same thing on the downside, like 408 to 407 is confirmation. But it's roughly 410 to 415. So top of the range failed today. Choppy day. But, was it inside day? Yeah, inside day today for SPY. Just kind of like a choppy rest day that closed weak, but still above support. Moving averages still sloped up, closed above the moving averages still. So nothing really too much to worry about here other than CPI on Friday. Tomorrow is the day before Friday, so I wouldn't expect any wild moves tomorrow. If they were gonna be front running this number in a way, they probably should be doing it already. They wouldn't just do it like the day before. So it's hard for me to argue that they're even front running it in any way when we haven't really done anything consistent. Like yesterday you could have said they were front running a good report. Now today you could argue they're front running a bad report, but it's usually not like one day type of thing. When they front run stuff like that, it's usually a couple days, if not like a week. So I don't know not that I don't know, just I do know that it's a binary event and it could go any way. So for tomorrow, probably a similar day like today, unless we're starting to really get above 416-ish on the upside and then 410 on the downside. We'll see how we gap. If we gap below 410, and if it's a big enough gap, we'll assess the possibility of a gap and go to the downside. And same thing on the upside if, for some reason we're gapping up pretty big. Although I find that hard to happen just because, again, we're probably not really going to see a big move right before this big event. So yeah, I mean, other things. Let me just take a look at the list from this morning, see if there's anything too exciting to talk about. I mean, a lot of stuff was good off the open and then kind of failed and rolled over. Looks like PayPal never really went. Pins through 20. We've been talking about pins 20. I'm definitely upset I didn't get to add to this today. I think this went through 20 either like immediately off the open or like even 5 minutes before the open. I remember like doing the meeting, finishing the meeting, the market opened right as I finished the meeting, and pins was trading like 20-30 already. So I don't know if it just happened right away. It looks like the open's 2016, so it triggered pre-market. So pins through 20 was decent. I know Derek had brought up Soxel, and then we were looking at NVIDIA intraday. I think Josh was the one that brought up NVIDIA 190 intraday. And it seemed like this was a little bit of they call it like a magic carpet ride when a lot of us take this, but NVIDIA bumped its head up against 190, came back down, moving averages sloped up, back up through 190. I know Derek took this, I took this, I think a few of the other guys took this through 190. But what I was trying to say this morning, range-bound market, still a bear market. Buying high to sell higher is usually not a good game plan in a bear market. It's not that it can't work, but just you got to keep things kind of tight, and you can't be upset when it rolls over because, you're buying strength, you're buying high to sell higher. So similar to the market, NVIDIA went through 190. We got some kicks in that, and that ended up rolling over. And this is, this could be a good example too of like NVIDIA going through 190, retest 190, back up. A lot of us, myself included, raised our stops to 190, comes back down. I get stopped out of NVIDIA, I think, on this candle here. And then it's back up through 190, and you might be saying, oh, I got shaken out, this and that, like grr, whatever. But then it ends up rolling over all the way down to 185. So, for guys that get annoyed when they get stopped out of things, if you have a bad stop and you're not using the right stop, that's one story. But if you're using the right stop and like it's a legitimate level where the name has proved itself to you that it's holding the level, it's through the level with authority, it should not go back below the level. And if it goes back below the level, then you stop yourself out. And like this is a good example today where for all those times where you get stopped out and you're annoyed because you got shaken out, sometimes stops are a good thing. And if the stop is right, like that's the big thing. And it takes time and experience to really learn like the true, identifying those real levels where, okay, like if it's through here, it's good. It definitely should not go back below here. This is more momentum, but same idea. Just there's no way it should go back below 190 if this is, after retesting 190, holding 190, getting to mid 191s. If this is going to have momentum and go to 195 today, after it's up here, it really probably shouldn't go back below 190. So that was NVIDIA. Let's see what else. Energy, I think, was pretty solid today. I guess okay. I mean, oil's, again, oil daily chart, super dangerously good looking. Been saying that every single day. Been saying it could go parabolic. It's starting to really go parabolic here. So oil looks fantastic. Energy a bit shaky today. I had mentioned Oxy 71 if energy is going to be strong. Can see 71 pretty clearly here. And it couldn't even really get up there, so no harm, no foul. 71 didn't trigger. And then I mentioned if energy is going to be weak, for like a very cute short, MPC back down through yesterday's high slash back down through 114. So this was okay. Really, this trade triggered like right away off the open back down through 114. And then this new high might have shaken you out. And that's it. I mean, another, like concept that you should always think about, the best trades really only give you like one shot. That is pretty true. So, back down through 114, you guys really want to be in this like right away. Not that, it rolled over. It's still looking okay for a short, but extension shorts, extension can correct itself through price or time. So while this short worked today, I wouldn't necessarily expect this straight down to the daily ADMA again. Like, this could just have another choppy day and another choppy day and never even get back below 110. And 5 days later, these moving averages are caught up and it just has another leg higher. So just be careful shorting the strongest names in the market. It's not easy, and you should really only be going for, if you're saying to yourself, okay, daily ADMA is down at 107, you should be saying, okay, then a move to 110 is fair. Like, not that it can't go down here, but like, don't be greedy and say, give me the daily ADMA today or give me nothing. Like, you're saying, okay, it's way up here, it's pretty extended, so what's fair? Like 110-ish, maybe 111-ish. It's just like cute stuff for cash flow, where after 1, 2, 3, let alone a huge 4 and a huge 5th day up, what's more likely, up or down? It starts to become down, but you could have said that after yesterday and then fought it all day after this day, and then fought it all day yesterday. So short on the way down, back down to 114, that worked okay. But I would just say it's okay. I wouldn't even say that's anything great. Let's see what else. Facebook. Facebook was the other good one this morning. We had the Facebook inside day, but again, rolled over, right? Range bound, rolled back over. So Facebook had an inside day yesterday. If anyone's listening and doesn't know what an inside day is, it's when the candle trades inside the range of the prior day's candle. So it's an inside day because it's a daily candle, but you can have inside candles on any time frame. But so Facebook had an inside day yesterday. This is one where, again, it's like, I was saying it this morning, it's in the area where you want to think it's like in its value area, but at the same time, it just can't, it's not breaking up either. Like, it's kind of just sitting here. But so inside day, this also triggered right away, like pretty early on. First 5 minutes, you can see it triggered. Had a great move up. Got up to 200. First time it got to 200, it pulled back. Second time it got to 200, still shaky, still pulling back. But every time it's pulling back, it's holding up. And that's really what you want to see for real moves higher, is when it fails levels, but then doesn't fail all the way down. It fails, holds, shakes. It's holding, it's failing 200, but it's holding 199s. There's still buyers in 199s. There's still buyers in 199s. It's not just momentum buyers, and then the second that momentum trend breaks, the second that momentum trend breaks, those buyers aren't there. So third time it gets through 200, it has a nice move, but market kind of kills this one, and just same idea, just range bound trading. So up to 200, failed 200, back down, closed okay, still looks okay, doesn't look bad, doesn't look great, and probably just going to depend on what the market does. So CPI Friday, we got one more day to get through. Again, probably not really expecting too much for tomorrow. I have a hard time seeing a huge market move either way tomorrow, and maybe I'm jinxing it by saying that right now and we gap down and go, or gap up and go. But until SPY's over 416.50 or below 408, just play the range for now. And I think that's all I have to talk about. So any questions, comments, anything like that, definitely happy to take any questions. Yeah. All right, let's general thoughts on the price action in BABA. Yeah, so BABA's super strong today. Is this because China is was there a China reopening headline I missed this morning? Something like that? I don't remember. I'm drawing a blank right now as to why these Chinese names were super strong today. Does anyone know? If no one knows, I'll look it up real quick. Just continue news of reopening. I think there was a headline on China easing. Oh, I think I might remember posting that as well. Let me just see if I can see anything real quick. Shares, yeah. So there was a headline this morning. Chinese regulators approve some video games for release, increase optimism that country's easing pressure on its tech sector. So we had like the DD news. I think that was yesterday, right? Or no, 2 days ago was that DD news. But yeah, I guess just China's chilling out a little bit, which is good. This honestly half felt squeezy to me as much as it was a real move. These China names are definitely shorted. If you don't think these Chinese names are shorted, I mean, just scroll out and look at what these charts are doing. So these are definitely shorted names. So let me go back to your question. General thoughts on the price action of BABA. So, I mean, this chart's about as clean as you can get, really. Personally, I didn't have a focus on the Chinese names today. I wasn't really watching them too much. We looked at BABA like up here intraday for like a cute short. But it wasn't really like my focus off the open, the Chinese names. So I can't really tell you based off personal experience how this went today. Just using hindsight and looking back and looking at the chart. This is clearly a fantastic chart. So let's look at our levels for BABA. So 110. 110, you can maybe argue 108 is a bit of a level as well. Let's see how 110 was treated. So Bob is opening up huge, gap and go to the upside. This is exactly what you want to see for gap and goes. Not because again, gap and goes, gap and go. They don't fill the gap. That's not to say BABA couldn't trade like halfway down or something like that, but it's, a gap and go isn't gonna fill the gap all the way. Not to say it can't, but that's not what a gap and go is. So similar to the market yesterday, how we were thinking a gap and go was possible to the downside, but things just ripped right up. SPY pretty much ripped right up. Apple definitely ripped right up yesterday. IWM ripped right up yesterday. A gap and go should involve much more time correcting action than price correcting action. So this is exactly what you want to see for a gap and go. So BABA opens, kind of choppy sideways action. You get an inside 5 here. This inside 5, and this is what Derek was saying, right? And maybe your 5-minute 80 May wasn't even quite caught up on time, honestly. But you get an inside 5 here. This inside 5 breaks up. The day highs break up. You probably, the early most aggressive buy has probably got to be maybe not through this inside 5, but either through the inside 5 high or through the day high. You at least got to start some. And that's through, that's through 110 as well. So let's say you missed that. Okay, I missed that, but the price action is super, super strong. So I'm going to keep watching it. So BABA has its first break. 110 is the daily level we just identified. It goes right through 110 very easily. It doesn't even pull back off 110 at all. That's like pretty impressive. So, these should all be like little notes you're taking in your head. Like, okay, I missed the inside 5, or I missed buying day highs because I didn't want to buy into 110. Wow, 110, it broke through 110 easily. That's like impressive that, big buying in this thing. Okay, like I want to buy this. I want to get into it. But you don't just chase. You want to be patient. So you're patient. 5-minute 80 May catches up to this bull flag. It's bull flagging. So what do? You either buy through day highs again for confirmation, or you, after this 5-minute 80 May catches up, you look for some type of inside 5, some type of consolidation where you buy in the consolidation versus the low of the flag. Looking for a move higher. This is more like, it's like kind of like mixed of like science and art, where like you see how like, and we see this all the time with like the 5-minute 80 May, it like perfectly like cups it and curls it up. So if you buy it in the middle of like the cupping or whatever, You don't just want to like buy here versus like a previous 5 minute bar low, because you get shaken out, especially in a name like Baba. You get like shaken out all the time. So don't like, it goes up, it shakes around, and then usually you can start to really kind of see like towards the end, maybe not at the very end when it breaks day highs, but towards the end it really starts to curl up, and that's where you want to be buying these things. Once they're really starting to curl up, they've had plenty of time to consolidate. The 80 MA is right there. You don't just like buy the first time it touches the 5 minute 80 MA, because then you're still dealing with 20 more minutes to chop. But once it really starts to curl up and it's really holding and it's showing like, okay, like buyers are here, they're still bid, still bid, still bid, still bid. There you go. So, and then after that, pretty much the same story. Only usually, you want to be in these things by like 11 or so. Not to say you can't catch higher moves here, but after this second move and this run up here and this huge volume up here, I'd be a lot more nervous about, trying to buy this for even more of a run. So that's my thoughts on Baba. Fantastic price action today for sure. Definitely think it's partially a squeeze. I'm sure there's some real buying there too, but definitely a nice squeeze in there as well. And right up to 120, which is its next big resistance level. 120, you got the daily 200 coming down as well. But you got 120 here, and then it looks like kind of 128, 120, and then 128 are your next levels. Fantastic day. Would not want to see this give more than half of this back. Definitely not down below 110. I know there's a gap here, but it's an ADR. This thing's a gappy name. Fantastic handle by Baba today, for sure. Was the Prince on? Oh, I think I saw that tail. The Prince on Baba real. I don't know. Maybe someone can answer that. I don't know if this is real or not. If usually once this happens though, you're not like, if you have a stop at the low of this bar or at the low of this base, usually once this happens and if it stops you out, you're not getting stopped out here, because this is like one print. So it's triggering your stop, but you're still getting stopped out here. So just make sure you take a look at what price you got stopped out at, and if you're getting stopped out right here, then you just gotta buy it back real quick. It's annoying, but that's just what you gotta do. Facebook changes to Meta tomorrow. Good to know, Josh. And then AMD Analyst Day is like all day tomorrow. Also definitely good to know. Thanks, Bill. With shelter being like 1/3 of CPI and oil going crazy, it's going to be interesting for sure. I agree. I'm pretty hyped about this CPI number. Not because I'm bullish or bearish or whatever, but just I know it's going to be important for sure. Josh posting some Twitter news. Jerry saying maybe Amazon tomorrow. They were buying puts in Amazon early on this morning. I remember that. I remember thinking like, it's kind of interesting that they're sweeping puts in Amazon, but throughout this they were sweeping puts, and Amazon fell back over. So if you're saying Amazon for a long, yeah, maybe. Just kind of looks like the market right now. Like think of Amazon 120 is like SPY 410. It really shouldn't get back below there. If we gap below there and then they buy it right back up, that's totally fine. It looks okay. It looks okay. I don't love it though. But it is above 120, so okay for now. Got a lot of mics here today. Yeah, I think I noticed that. Also, if you're able to control your emotions at the moment of truth when getting stopped out in slippage or a lack of there, you'll get better. Yeah, for sure, Rich. Definitely. Thoughts on Target? Yeah, this has been a messy stock because there are press releases coming out. I'm curious, what does like Walmart look like? What does like a Macy's look like? So Target, in my opinion, is not a fantastic trading stock the same way like Walmart isn't a fantastic trading stock. That doesn't mean it's not, that doesn't mean it's something you don't want to own or anything. I'm sure this is actually, someone said Target's still kind of expensive, right? Or maybe not. Maybe they said it was getting cheap. I don't remember. I don't know if this is like a great cheap area for Target or not. But this is probably a stock that you want to just own and not trade too heavily. If you want my opinion on the chart looks more bearish than bullish. It's starting to be in a downtrend. Its moving averages are sloped down. The moving averages have caught down. Yesterday they bought it up. Today they tried to buy it up, but failed off resistance. 160 is clearly your inflection level here. Let's take a look at it, like the 5-minute chart. Looks like 159 is kind of important as well. 159 to 160. So 159 and 160 are both important for Target. This probably builds out for a couple days more. If this is gonna kind of like bust out and break higher through 159, 160, this probably just doesn't go up a third day and just do it tomorrow. It probably, because it's testing its 80 it probably comes back down, but then you want to see it like hold 155, chops around for like a day or two, and then goes up. So that's technically speaking. Again, though, it's not a fantastic trader, and you probably really got to even swing it over like a couple days to really get paid on something like this. And probably better to sell puts on it, something like that, or if you're long stock, sell puts, sell calls as well. So I don't know, the chart, I can't say the chart looks good. 150 is your level for swinging that it really definitely should not get back down below. So if you're in it already, keep it versus 150. If you're looking to buy it, wait for confirmation over either 159 or 160. Probably you want to use 160 because that's where the daily 80 MA is. So okay, I don't know if that helps at all really for Target, but 150 on the downside if you're swinging it, and then on the upside 159 to 160 if you do want to buy it. But again, this type of name, don't just like go full BP the first time it goes through 160. It's not that type of name. It's a slower name. So, yeah. Thanks for posting the China news. Let me check YouTube real quick. So if there's any questions. YouTube, yeah, for sure. Who's up is thanking me for the information. I'm happy to provide the information that I know. Rig thoughts and levels. Rig had a huge day yesterday, right? Resting today. I mean, obviously $5 is going to be a level. If Rig can hold up and close well this week, this is going to be a fantastic weekly candle. So for starters, I would argue you really want this Rig ideally to close above 475 this week. That would be great. However, because it's a little it's obviously extended on the daily, but if this is going to keep going, this really should time correct sideways while these moving averages catch up. Roughly every 20 cents. So 460 is a bit of a level. Ideally, you don't want to see this lose 460. That's a little more than halfway of this candle, but definitely don't want to lose halfway of this candle. The daily 80 May is not up to 460, so you can't really fault it if it does lose 460 tomorrow. But even this 440, then the next 20 cents down, you can see this 440 was a bit of a level back here. Got rejected off 440 on this day, where it looks like it opened up, traded up, got rejected, and then ended up failing and going all the way back down. No way that it should get back below 440 if this is going to turn into an active sequence. No way it should get below 440. Obviously not 420, but definitely shouldn't get below 440. Ideally, does not get below 460. And then clearly you got a level at 5 that it's probably going to take some building up into 5 before it busts through 5. It's probably not going to get through 5 super easily. But if this is going to really hold up well, really don't want to see this below 460 to 450 on rig. Looks fantastic. A little extended, but looks good. Chewy Director buys $5 million in common stock. What are some factors determining if you would hold overnight? How much cushion do you want to have? And if the stock closes weak, what would that affect whether you close a position or not? Sure. So there's different. So not every trade is the same type of trade. I'm sure you know that. Not every swing trade is the same type of swing trade. I'm sure you know that too. So first you got to ask yourself, like, what type of trade is it? The names that personally, the names I try to swing for real, I definitely use technicals to help me enter, but I am not swinging them because the technicals look good. I'm swinging them based off like a fundamental story / theory / whatever, but it's fundamental. And the sizing is very important as well. You got to know your risk reward. So, if your risk, it's okay to buy a stock and risk it to zero. Like, that's okay. If you think the stock could double or 5x or 10x, then is it worth it to risk to zero? If you think it could 5x or 10x, like, yeah, that's good risk reward. Not to say that I'm risking all my swings to zero or that's just what I do when I swing a stock, but even say 50, is it worth it to risk a 50% drawdown if you think it can double or more? Yeah, it could be. That's good risk reward. So that's a different type of swing than just just buying like a market correlated swing on a breakout, which we haven't been able to do really in a while because of this bear market. But just buying, say everything works out perfectly with CPI and SPY ends up breaking 416.50 and you buy 416.50 on SPY and SPY closes well and you want to swing it because it closed well and it's a nice daily breakout and you want to risk, you want to give $5 back because you think you can make another $20 in SPY, then it's good to keep and good to swing it. So let me just reread your question real quick. I guess that's the only factor really is, and then other factors come after you answer the first question. But the first question I would ask yourself is, what type of trade is it? Is this like a stock that you really want to own because you love the name, you love the company, you love the fundamentals? And some of the bigger names like a Nvidia or an Apple or something where obviously those are great names. You want to, I would love to just own Nvidia and Apple and AMD and just whatever. But they're so big that they're too market correlated where they're not special enough that if the market's going to go down, they're going to go down. They can keep going down. Versus, is it something that, so that'd be one type of swing versus is it something where you don't really care and you just had it, the technicals just looked great and everything worked out perfectly. You bought through the breakout level, you bought through the daily level, or it came down and you bought versus daily support, it held support and bounced well, and you have a really good price and you're up on it, and it's just good, but like you don't really like care. Not to say like it's a bad company or something, but it's just like whatever. Don't just like sell it just to sell it, but maybe either keep less or be tighter with your stop or something like that. And I'm saying this to, like, I see your like follow-up question of how much cushion do you want to have if the stock closes weak? Would that affect whether you close your position or not? So that depends on what type of trade it is. So you definitely want to have if it's like some random thing where it's just like technical, then you definitely want to have some cushion. If you really like it and you got like a real daily level, like for example, Amazon comes to mind right now. Like Amazon doesn't look fantastic, but it doesn't look terrible either. And you have this daily level of 120. You don't just want to sell Amazon right here because it doesn't look great, for the same reason that you don't just want to sell it on this day because it had a bad daily candle. Sure, the next day it went down, but you have your daily level held. You could have been buying Amazon versus 120 yesterday and made some money on that. So same thing today, like you have your daily level, but if the market's going to have like a real leg lower again in the coming month or couple months, and Amazon's special, but it's going to go down with the market. So that's where then it comes to like sizing. So usually on a special, like more fundamental swing, you're sizing, and by sizing I mean like overall net notional dollar amount in that swing. For me anyway, usually it's smaller because you're going for a bigger move. So like if you're buying Amazon off 120 support, you're probably buying like way higher in dollar value amount / like share size amount because you're taking like 50 cents risk or whatever. But like you're not buying Amazon with $1 risk thinking that Amazon's going to double from here. Not to say it couldn't, because I guess it could, but like that's probably not your play. You're probably thinking, I'm risking $1 to make $5-10, and then maybe that $5-10 turns into $20 or so. But like you're probably not buying size thinking Amazon could double right here. So because of that, you probably have more size in that type of trade where it's more of just like a technical trade. And because of that, you need to respect your stops way better. So if you have that type of size because it's technical and you don't have a cushion and it closes weak, you probably don't want to keep it. And I've definitely made that mistake before where you want to hold it. It's a really good company. But if you're buying, you can't buy Amazon at 121 and risk $1, have it not close well, and then you're all of a sudden that trade that you were supposed to risk $1 in, and Amazon's at 115. Now all of a sudden you're risking $6, and you got way too much size, and you're down too much P&L on it, and you're puking out of your Amazon stock at 115, where theoretically, if it's a good name and a good company, you should be buying more at 115, not buying it at 120, selling it at 115, right? And it's always sizing with those like types of swings. I find it's always that you have too much size. So, not to go off about a tangent on swinging and stuff like that, but like, I guess first ask yourself what type of swing is it? What type of trade is it? Is it just technical? And if it's just technical, then you probably have like a real daily level. Versus like, I guess even like TEL. I just started TEL, for example. TEL is something that I think could double or more, and I don't have a real daily real daily level that I am buying it versus. I'm more just like, averaging in and trading around a core. And if this, I have a plan where if this, I'm not buying TEL versus 450, and now in TEL I'm like, oh crap, like, what do I do? Like, I have a plan where if it goes to 4, I'm not going to freak out. I'm going to buy more. I might be like a little annoyed, but I probably won't even be that annoyed because I want to get bigger in it. But, if TEL's down to 4 and under 4 and like is like trending down over the next couple of days, Like it's part of the. It's not part of the plan for it to go down, but it's part of my plan where my sizing is fine. I'm fine with buying more under 420. I'm fine with buying more in front of $4. My sizing is okay. My net dollar amount in this trade is not that big versus, you're in something like a Nvidia or even like an AMD where you think you're taking 25 cents risk, so you're buying 400 shares and then you think you nail it and you think, oh, I'm swinging 200 shares of AMD, like, let's go, I got some size on. But that actual net dollar amount is much bigger than, you should be handling for your account. And then when AMD breaks, say, like 100, and you get stubborn and you think that you had a good AMD trade and you're finally going to swing AMD, and you get stubborn and you don't want to respect your stop, and all of a sudden AMD is down to 95, and that 200 shares that you have at 95 is all of a sudden, down an extra $1,000 that you weren't planning on being down, and that wasn't part of your game plan when you're getting into the trade. So then AMD at 95, instead of being happy that your stock that you like is cheaper and you're buying more, you're like pulling your hair out and being like, oh my God, like I should have stopped out, and now this loss is too big. Like, what do I do with this loss? Like, do I really take this loss down here? Like, do I buy more? And then you buy more at 95, and then it's down at 92.50, and then you're really pulling your hair out. But on the flip side, in theory, if it's a great name, you should be even excited to buy more at a cheaper price. It's at a cheaper price. You should be excited, right? So have your game plan, and know what type of trade that you're in. And hopefully that helps. I didn't mean to go off on like a tangent like that, but I was just trying to make things clear. So, hope that helps. We got 4 mics now. Wow, that's a lot. Does the brain band you were talking about website to study more? Does the brain band, which you were talking about, have a website? I'm not really sure. I forget what the name of the company, Robert, is, and I'm honestly not sure if I'm allowed to say it, because I know Derek said he wasn't sure if he's allowed to share it, but I'll let you know when I get the all clear. And someone in here was talking about a different company earlier, it sounds like. I think Andrew K. was talking about it. So... Twist and Shout, great track. If I was in Roblox today, would you have trimmed into the 34 area? And when you trim, is there like a certain percent of position you take off? Would I have trimmed into 34? Probably, yeah. 35 is clearly your level here. Not so much 34, 35. So probably like over 34. So if 35 is your level, don't try to trim 34.99 and be upset when you don't get that fill. If 35 is your level, trim over 34 on the way to 35. And especially like if it's doing it in this extension where, you're trading over 34 and clearly you're extended your 80 amount the 5 minutes way down here. So I probably would have trimmed some there. And when I trim, is there a certain percent of position you trim? So it's not a certain percent of my position. It's not a certain share size. It's about, again, every single trade's different. Everyone has different account sizes and share sizes and everything like that. So it's about your risk reward. So if you are long, so like say, I don't know if you bought Roblox today, like if Roblox was a new trade for you today, but say Roblox has an inside day or basically an inside day yesterday, and your trade is to buy through, 32, let's say. So you buy Roblox at 32. You buy through 32, you get a great trade. Your risk is like 30 cents. So you get your 1-to-1 somewhere 32.40ish. You get your 1-to-1 and then it rips up another, so 30 cents, 30 cents, 30 cents. It rips up another $1.50 from mid 32s to 34. So you got to ask yourself, one, are you keeping your stop at the day low? Are you raising your stop here? And it's not necessarily a right and wrong thing to do. It's just what do you want to do? And what you want to do comes down to risk reward. So let's say you buy 400 at 32, you sell half at 1-to-1, so you got 200. Or no, this is a bad example. That's a bad example actually. Let's say you buy 1,000 at 32. You sell half at 1-to-1, so you got 500 left. And then up at 34, in extension, heading in towards daily resistance, you trim another. How much should you trim here? You got 500 left, you got half your position left. Should you only trim 100? Should you trim 400? Should you trim a few hundred? It depends on your risk reward analysis and what you're comfortable with giving back. And that goes into kind of like what type of trade is it? Like, is Roblox a company that you really love and really want to be in, and you've been stalking in, waiting for your entry, and today's finally your entry? Then you probably want, and you have fundamental reasons and fundamental values why you think this thing can be up, this is at a cheap price and it can be up 50% or more. Then you probably want to be greedy with it and keep a lot of it. However, if you don't have all that fundamental backing and it's more of just like a great technical trade, you probably don't want to be as greedy with keeping it. And you just like do the math and you ask yourself, look at your daily chart, evaluate your risk reward, always have like targets in mind. Not that you should just like take off all your stock at profit targets, but you should have levels in mind. 35 is a level, 40 is a level, for example. And ask yourself, at 34, if this rolls over and fails and goes back, say like you don't raise your stop from the day low, or maybe you raise it to like 33, and at 30, so you raise your stop to 33. At 34, you got to ask yourself, am I okay with giving this back $1? How much more do I think this can go? If 35 is like a huge resistance level and you think it can only go another $1, is it worth risking $1 to get $1? Maybe, maybe not. That sounds like a very fair, not great risk reward. So maybe trim more. But if you really love it fundamentally and you think this can, or just technically, and you think, this is going to blow through 35 today, this is going to 40 today, then is it worth giving back $1 to make another $5? Sure, that's a great risk reward. So there's no right or wrong answer, really. It's just kind of like evaluating your own trade, evaluating your own risk reward, and asking yourself, don't just and don't trade your P&L either. Have the proper out, have the proper levels in. Don't just have random outs, have outs where you tell yourself, okay, if this trades back down below here, like there's no way it should trade back down below there. So I know my idea is wrong, or I know the stock is failing if it does. I know buyers. I know the buyers that were here earlier aren't here earlier if they're letting it get back down below there. So just ask yourself, if you have 500 shares left, how much of it is worth giving back in order to make what? And again, is it worth to give back something back $1 to make 50 cents? Probably not. Is it worth to give back something $1 to make $2, $3, $4, $5? It might be. Depends on what type of trader you are, what makes you comfortable. So yeah, hope that helps. Jackson, whoever asked that. What is the technical significance of an inside candle? Does it indicate the start of a time correction? No, it's not really significant. It's more of just a contracting pattern, if you will. It's a pattern of rest. And really the main point of them is to get smaller risk. So I'm trying to think of like a good inside 5 that happened today. This looks like Facebook had an inside 5 right here. So Facebook trades straight up. It trades through the day high. It's looking good. Volume's good. You're thinking, okay, like broke the daily level. Volume's good. This should keep going. I want to buy at some point, but you don't just want to randomly buy. You want a signal. So what's the signal? A pullback, and then some type of rest, and then going back through the day high. So you could buy through the day high, but an inside 5, aka a time correction, gives more time for the moving average to catch up. And then again, because it's an inside 5, it's a smaller range than this candle. So like if this, like pretend this red candle's not here and it's just this candle, and you're buying through day high, you need to probably give it down to the low of this candle or the low of this candle. But because it's like a rest candle and it's smaller, it just gives you smaller risk and it lets you cheat a little bit. So instead of buying through the day high, you can cheat and buy through the inside 5. Oh, I think NVIDIA today too, actually. This was an inside 5 for NVIDIA too. So, you don't want to buy through versus the low of this candle. This is an inside 5 though. You can buy through day high 190, or you can cheat a little bit and buy the inside 5. So I wouldn't overread inside candles, because when the market's doing nothing in the middle of the day, like you're gonna have inside 5s all day. And if you try and buy the break of a random inside 5 in the middle of the day, I promise you're probably gonna lose money more often than you make money. I've tried it. When I was a newer trader, that was like my go-to, was buying dumb inside 5s. So yeah, don't like overread them, but it's just really it's just a resting period where it's literally a period of like buyers and sellers fighting, right? Like that's like literally what it is. Big green candles, obviously there's more buyers than sellers. Big red candles, obviously there's more sellers than buyers. Inside choppy doji candles, it's like a fight between buyers and sellers, and it's like, who's gonna win the fight? Does it break up or does it break down? So I guess that's kind of the idea behind inside candles. I'm not sure if there's a specific date for for the financing transaction. We're more waiting for them to get a deal, get like a partnership with like some of the bigger companies for shipments and stuff like that. Again, that's not something I'm expecting to necessarily make money on tomorrow or next week or anything like that. Cool, let me just check YouTube for any other questions. Nope, looks like I'm good. So yeah, it's past 5 o'clock here, so definitely happy to wrap things up if no one else has any questions. Again, just, final thought, final summary for tomorrow. We're still in the 410 to 415 range, or arguably the 408 to 416 and a half range. CPI on Friday, tomorrow's Thursday, so one day to get through before we get to CPI. Whoa, the Fed. Just kidding, it's a fake print here. But yeah, anyway, CPI Friday, tomorrow's Thursday, probably not expecting too much tomorrow, probably just another choppy rest day. But if we get and stay below 410, that changes things, and if we get and stay above 416, that also changes things. So that's it for tonight, and we'll see you guys tomorrow morning. Have a good night, everybody.